Hi everyone! Today let me tell you the story of Tether, the most popular stablecoin on the market with a market cap of $6.5 billion and a lot of controversies around it. Many people believe that Tether or Bitfinex print USDT out of thin air with no oversight or regulation and that it is not backed by the US dollars as promised. Please like, comment and subscribe. Please have a look at the links below, which will save you some money. So let's start with the Mt. Gox crash. It was the biggest marketplace for crypto. After that, Bitfinex has emerged as the major trading platform. And obviously they have run into some issues with transferring money. Obviously, banks don't want to have anything to do with cryptocurrencies, and it's difficult to get fast and efficient transactions when you're dealing with crypto. So because it was impossible to efficiently move US dollars, Bitfinex has created a new stablecoin. They called it Tether. That was 2014, and initially it was on Omni protocol, which was kind of related to Bitcoin. And then transferring US dollars became easy. You didn't have to go through all the issues associated with transferring US dollars, which we'll explore later on. After that, USDT became an alternative to US dollars for holding balances of the exchanges. After that, it was discovered that it's a really good trading pair, especially great for new exchanges which didn't want to go through all the hassles related to supporting bank deposits and dealing with the bank accounts and all the issues related to that. And the best example is Binance. So they didn't initially offer any bank support. They just took Bitfinex's Tether, they just created a nice product, a nice interface, and they have made a massive success with that. With great track record, with Bitfinex existing since 2014 and the market cap growing so rapidly, that Tether has gained recognition beyond just crypto, and the Eurodollar market is really in need of services that Tether provides. Like Eurodollar market is quite a troubled market, and by Eurodollar I mean dollars. Outside of the US banking system. So Eurodollars are dollars not only in Europe but anywhere in the world, but not in US, and the same term can be referred to as per any other cryptocurrency, or any other currency. So you can have euro, yen, and things like that. And this is a massive market. The size of this market is around almost $2 trillion, so it's $1.7 trillion, but it's hard to estimate really how big it is because it's not thoroughly regulated. And apparently nearly 90% of all international loans are made with the Eurodollars, and that's because the US dollar is the kind of national reserve currency, and it's being recognized all over the world. So the Eurodollar market is slow, and it is troubled by all these issues which I will mention in a moment. And Tether is really a great tool which resolves a lot of issues, and the same issues apply to businesses, to grey markets, to some criminals and whatnot. And this market, the Tether market, has been recognized by all these people which have nothing to do with crypto for quite a while, and this is partially why there was so much demand for Tethers. And now there is even more demand with some mainstream services, mainstream businesses like Pornhub offering support for Tether. So this has all led to 6.5 billion market cap, the creation of new Tether Gold, and there are plenty of other Tethers, euro, yen, and any other major currency. So let's start with the good and the bad. So why there is so much USDT on the market? Is it because Tether just prints the money out of thin air, or is that because there is a true demand and a true reason why there is 6.5 billion Tethers on the market? So the market cap goes up because crypto is more and more valuable. Although we are not seeing 20K levels, the averages are going up pretty much all the time. And because more people have more value in crypto, they can hedge higher values in positions in tethers like dollar or euro tether, especially at times when there's a lot of fear, like after the recent drop. So if you sell your crypto and buy tether, that drives the price up. And even now the price is being driven up. It's 1.01 US dollars per one tether, and that creates an arbitrage. So if you keep buying tether with your crypto, you drive the price of tether up, and then some arbitrageurs just deposit US dollars and buy tether at $1 and sell it to you for $1.01, and they are making profit. And it's not only that. For example, on exchange like Binance, their futures contract is gaining more and more popularity. It's now trading significant proportion of the derivatives market in crypto, and it is the mandatory collateral on Binance. So tethers are the mandatory collateral, and if you want to use Bitcoin as collateral, it will be used as collateral on some really bad terms, so you can only use part of it, and there are some other issues which we may explore in the future. Also, the decentralized finance on Ethereum is gaining traction, and while at the moment the USDC is the most popular stablecoin on DeFi, the DeFi will drive demand for US tethers. So that's related to crypto, but more and more people use it as a fast Eurodollar market, which has absolutely nothing to do with BTC. And now it's being transacted not only on Omni protocol, but also on Ethereum and on Tron. And not only Eurodollar market, also things like Pornhub clients. So why would you use Tether if you have nothing to do with crypto? So imagine you are a genuine businessman running a genuine business in the third world, and you're selling items or services to US customer or a customer anywhere in the world outside of your country. So with Tether you get non-reversible, instant and free transactions versus some alternatives. So first of all, if you are living in the third world, you may have absolutely no banking access whatsoever, and that's obviously a trouble. You can use card transactions, but there is 2 to 3% fee for every card transaction, and also there are a lot of reversals. So there is an absolute sea of scammers, and they will reverse your transactions, and they will create more and more costs for your business. Another option is just international banking system, and it takes often way above the kind of 3-day standard transfer mark, and it can take up to infinity of time. There can be some additional checks for your transfers, and it can take absolute ages. A transfer can cost around $30 to $50 per single transfer. You need to comply with all the know your customer and anti-money laundering regulations. There is a lot of scrutiny if you're transacting large volumes, and every transaction is being recorded on the legacy records. And imagine if you accidentally sell let's say a tire to a tyrant in Africa who is breaking the law and doing some bad things. You're instantly on the hook. Your money can very easily be seized. and you can have services denied to you. Like if you are dealing with crypto, a bank can just disconnect you from the services, and you may end up with absolute no banking whatsoever. So it's easy for us to ignore cases where there is no access to banking at all. Imagine living in Africa and having no access to banks, and Tether on a mobile phone is literally the only option to transact US dollars in a lot of cases. And although this is not large value and not large volume, this can grow over time. The only other alternative is to transact in the local currency, which keeps devaluing. So there is a cost to holding that currency. So if you're watching this, you're probably a privileged Westerner and a Westerner, and you take banking for granted. But having no access to finance is beyond your imagination. So these are the pictures which just demonstrate how people transact and how bad it is in some third world places. And Tether is actually perfectly suited to serve people like that. So the good stuff about Tether is that it allows you to park value with no exposure correlated to crypto, especially when there is fear and when derivatives trade at a discount, so shorting them is expensive. It's extremely fast, pretty much instant. There are very little regulations, very low probability of having your assets seized, very little know your customer and AML. There's only the initial check when you mint Tether, and then it can be sent freely between the accounts, and then a check is done at the time you redeem Tether. There was one massive redemption in 2018 when there were some issues with the Noble Bank, and that's around this time period. So there was almost $3 billion in Tether, and over a very short period of time it has dumped to 1.8 billion dollars. So that's over $1 billion being redeemed, and that's an effect of price of Tether going down to, I think that the lowest it went to was $0.85. No, it was probably here. Anyway, this chart does not reflect that, but at some point on some markets there was a dump to 85 cents, while this only shows a dump to 96 cents. And that actually proves that these Tethers are really being backed. These people have genuinely withdrawn Tether, and they have purchased Tether at a discount and then sold it at $1, and they have made money. Obviously, this sort of operations are not available to everyone. So yeah, the issue with the Noble Bank was it was a Puerto Rican bank. Bitfinex had long-standing issues with banking. They have moved everything to Noble Bank, but then Noble Bank has drawn some scrutiny, and Bitfinex had to leave Noble Bank and find some other partners, and that led to some more issues. However, these days there are more opportunities to transact US dollars between the exchanges. So the initial reason for creation of Tether was mainly to transact money between the exchanges and to facilitate for arbitrage, and the amount of Tether back then in 2014-15 was just $500,000. Now there are plenty of banks which do actually serve crypto customers. So if you are looking for a bank that serves crypto, Silvergate is the one which connects pretty much everyone. So that use case of Tether is becoming less important, but still it's easier to use Tether than to use Silvergate. So non-crypto uses, it's the faster, swift, there is no risk of holdups, there is not as much scrutiny. You don't get the label of being a crypto client, and keeping balances in Tether no longer has the big cost opportunity because the interest rates for US dollars are around 0%. So in the past you wouldn't hold dollars in Tether because you could hold them in the bank and then earn interest, but these days there's no interest. And that leads us to the bad, so the bad side of Tether. There is a minuscule chance that Bitfinex is lying about the underlying deposits. However, if that was the case, Letitia James, who is the Attorney General of New York, who has a case against Bitfinex, she would know about it. She has demonstrated explicit knowledge about Bitfinex's finances. She knew pretty much everything about the loan which was issued from Tether to Bitfinex. And if she knew that, she would definitely share that information. So it's pretty much certain that Letitia James did not see any irregularities in US dollar holdings of Tether. There is a minuscule chance that she has that she didn't realize something, but I believe that chance is really small. And actually, if there was $2 billion missing, she would definitely know about this, because she has insight into everything related to US dollars and US side of things. She might not have as much insight into the euro dollar market, so dollars outside of the US economy. Actually, this story is pretty interesting. She demanded documents which probably would reveal some wrongdoing by Bitfinex customers, and she justified it by $850 million loan which Tether has issued to Bitfinex. Bitfinex was struggling with withdrawals. There was a big crypto company, a shadow bank, which was processing withdrawals for Bitfinex, and they have run away with Bitfinex's funds. So Letitia James has asked for all the documents, and she has justified it, saying that some US customers hold Tether, and because these customers can be done wrong by holding Tethers, while there is $850 million missing in the form of a loan, these customers could be at loss. So Bitfinex quickly responded with the $1 billion Leo fundraise, and she no longer has the case because Bitfinex and Tether no longer are missing $1 billion. So in that way, Bitfinex has protected its users' data for probably some period of time. I believe that if US wants data, they will get data in the end. If Bitfinex gets a big fine for not adhering to some regulations, that fine may be paid from the Tether holdings. So if the US dollars are not greenbacks, and they are almost equivalent to US dollars, and that creates some issues because there are a lot of regulations relating to US dollar transactions, but they don't apply to US dollar tethers. However, this could be flagged as an issue, and someone could interpret that the US dollar regulations should apply to US tether transactions, and that could create some regulatory issues and a big fine for Bitfinex and Tether. And then if there is a big fine, that fine will be probably paid from customers' funds, potentially. Another issue is that with 0% interest rate, the business model for Tether is not very profitable. The only profitable transactions are minting and redemption. Some Tethers are lost forever by the owners, and there is some minuscule interest above 0%, but it's not high enough probably to cover the costs. So at some point, if the interest rates remain at 0%, or if they go below 0%, there is potential to implement fees for holding Tethers, or to depart from the US dollar backing and introduce some fixed income backing. But we are not there yet. So that's it. Thank you very much for watching. Please give me the thumbs up. Please comment and subscribe. Please look at the links below to save you some money.